Hello and welcome to the Decrypting Crypto podcast. It is December 11th, 2025. We survived Fed rate day. As always, I'm Matthew House-Barbie and I'm here with Austin Knight. How you doing, Austin?
I'm good, Matt. How are you feeling about that rate decision?
Yeah, I mean, we're going to talk a little bit about it today. My view coming into this was um, honestly, I had pretty low expectations, but my hope was that it wouldn't be too bad. It
Hmm.
was basically where I was at. I didn't really have any any hopes really that we were going to see some big upside surprise. And I think a lot of that was just nothing made sense from a Federal Reserve perspective to show their hand in that way when they have had basically no data and they're
Hmm.
about to get a glut of data. So the risk reward of them just looking really stupid in like 1 week's time would have been very high. So the rate cut pretty much priced in. Good. I mean, if we didn't get a rate cut after that, it'd have been a fucking disaster. That's for sure.
Yeah.
But it kind of did basically what I thought, in all honesty. And I think some people were saying, oh, it was a little bit more dovish than I thought. Some are like, yeah, it's still a hawkish cut to a certain extent. I think it was somewhere in between. I think it could,
Hmm.
what I will say is I think it could have been a whole lot worse. That's
Hmm.
at least some positives. But there are a few things that in all the details kind of got lost that I I think give us a real insight into how we predict what might happen next. And of course, we're going to get some really key data coming up in the next week. So that's going to help also raise some bets. But I wouldn't be too
Yeah.
disheartened by current price action off the back of this. Um, Whenever anything is very priced in and you get what is priced in, usually you see kind of a little small sell off because people are speculating to the upside coming into it
Hmm.
and not taking the downside bet.
Yep. So, should we get into what happened yesterday?
Yeah, let's do it. So, as many people right now will know, the Federal Reserve decided to cut the the rate by 25 bips, moving the current rate down to 350 to 375 bips. And we have an upcoming FOMC meeting in January where they'll make their next decision. Now, something I want to show, I tweeted out this because I think this year, more than any year on the podcast, we've been talking about macro a
Yeah.
huge amount. I mean, I love talking about macro, so I'm kind of biased, but at least this year has validated why I should be talking about macro because it's been driving so much of the price action. And I pulled data a couple of days ago. Where is this? I shared it out. I'll find this tweet. Um, and for anyone that's not watching the stream, I shared out this data that took a look at BTC price from the start of October, and I mapped that against the daily probability that was priced in on the CME Fed futures of a rate cut in December of 25 bips. So what I was trying to look at and show here is how how correlated was the likelihood of a rate cut to the price of BTC. And what you can see in this chart is extremely, correlated
Mm-hmm.
all the way from the start of October, where we saw it was prior to 1010, where we had the huge kind of flash crash. But you kind of see, especially as we get to 1010 here, macro takes over. And it's kind of like, okay, we were riding momentum, and now this kind of black line is like the probability. You see, like, and this is just for December. This wasn't anything else. So it was pretty much at like 100%. BTC was relatively stable in its price, kind of moving upwards. And then we saw this big drop off that happened in the likelihood of a rate cut, something that I had and have been very much on at least the right side of history for this one, saying that pretty certain that we were going to get this rate cut all the way when we went down to 30% chance. You kind of see BTC price just slowly driving down further and further. And it wasn't until I think it was John Williams and was it Waller as well that came out and said, hey, we think it makes sense to cut rates. And, the probability went from like 30% to 85% in like a week. And then all of a sudden BTC stabilized. And I think because of the volatility in some of this, what we've seen is BTC has really struggled to break through some really key levels, because I think what everyone knows is, and we're seeing it now, as soon as we get past this rate cut, which we've just done, all eyes are to 2026.
Yeah.
And I think that's a really important piece. So I share that initially to just level set a little bit on why this stuff's so important. Now, bearing in mind, I've just said BTC price action follows the probability of a rate cut heavily. The thing that's important to think about there, because I see a lot of people, especially on crypto Twitter, and they are feeling a little bit down in the dumps because, hey, we got our rate cut, why didn't we rally? The thing to really think about in some of this stuff is when you're coming into a rate cut decision and it's priced in like 95% probability, which it was yesterday, that means the price action's already happened. It's already rallied to that point. Maybe like you get some upside and you go beyond it, but if you're already banking on the rate cut, the markets are saying this rate cut has happened. So I think that's a really important one to remember. And we've had some good examples in the past where it really hasn't been priced in, and we've seen major upside and big moves afterwards, like last year where we saw that. Was it the 50 bips like jumbo cut that we had in September, I want to say? Surprised everyone. And we were like, whoa, okay. We were talking about, are we going to get a 25 bips? And then we got the jumbo rate cut. No, that was not even remotely priced in. I think it was like under 20% priced in at the time. And yeah, we went in and obviously kind of had a very good end to the year that was more than macro back then. But right now, macro's driving everything. So going into the decision, and this is what I think has been most interesting, the thing that I've been kind of following. When I was looking a lot of the time at the probability, and for anyone, when I'm talking about the probability of a rate cut and how much that's priced into the market, I'm not using any kind of like proprietary kind of tooling here. Just Google FedWatch. This is the CME Group FedWatch tool, which very simply shows you this in simple terms of like, what is the likelihood of a rate cut? So you've got here, like, this is the January decision. What is the current probability based on futures contract pricing of a rate cut of 25 bips in January? Because what is saying, like, bringing it down to 325 to 350, which would be a 25 bips change, versus it remaining the same. You can kind of see right now it's at 24.4%. Going into yesterday, it was at 20%. So there's been a slight increase. But the thing that's been interesting going into the early December has been that the chance of a 25 bips rate cut in either December or January was pretty much locked in, but the chance of us getting both was very, very low. And I think the fact that this hasn't jumped up, this January number hasn't jumped
Mhm.
up more significantly, is telling about what our expectations are. Now,
I
the
mean, it's still even with the jump it just experienced, it's lower than it was a month ago, right? The
yep,
the expectation was about 28% a month ago.
100%. Yeah. And I think this is one of the drivers of this is some of the Fed speak that we've had throughout end of November, start of December, and in the meeting yesterday. But more importantly, we just know that everything can change next week. I have as much confidence that this number goes down to sub 10% as to over 60% on the 16th when we get non-farm payrolls, because it's the first piece of actual recent data since that giant government shutdown that we had. And
Mhm.
when you look at, I'm going to talk a little bit about something that I think is really interesting that not many people are talking about right now, which is the rotation of voting Fed members. But what we want to try and understand here is, okay, what are the things that are going to influence decision making towards more rate cuts, or less rate cuts, and what needs to happen for that to occur? And what has been a big narrative of late is how split the FOMC voting committee is. So for everyone that doesn't kind of know, the FOMC um, is the group that votes on rate decisions, 12 members. And you have kind of 7 members are board of governors for like different federal, regional Federal Reserve banks. You have always the president of the Federal Reserve Bank in New York. And then you have like 4 other regional Fed bank presidents. And something that we talk a lot about is like, is this person, like, someone that gets talked about a lot is um, someone like Waller, for example. And it would be like, okay, is this a hawkish member or a dovish member? Like, are they
Mhm.
more in favor of cuts or are they less in favor of cuts? Less in favor of being hawkish. Now, the the reality is, it's not actually very easy to just say this person is hawkish, right? Because their opinions change a lot on the data. Some are more malleable than others. Some have really strong opinions that they're just not going to budge on. But for a lot of this group, where we're seeing a lot of division, is that many of them are being quite data dependent. And typically, the split we see is people right now on the committee that we're seeing as and labeling as more hawkish or even like moderate to hawkish are much more concerned about inflation. And those that are more dovish are much more concerned about job growth and
Mhm.
unemployment. And so when we see big changes in, or any kind of change in either inflation data, recent inflation data, or job data, we see some like flip-flopping around a lot on some of this. And the key thing when we were when we were listening to Jay Powell talk yesterday is I do think he downplayed the expectations of inflation more than I was anticipating. Nothing too crazy, but clearly made some big comments around how they are still concerned about the job market and the labor market, and actually that there was a comment that they think that the jobs numbers are actually worse than even are currently being seen. So those members that are like on the fence, if we have our first non-farm payroll report since the shutdown that's coming out on the 16th, which is, I think, is it Wednesday? Tuesday of next week, that almost certainly is going to bring more volatility than this rate cut decision has to crypto, because it's much more rate sensitive. But and all of this is really about how does this data influence the January rate cut and beyond. What we saw from the Fed yesterday is that they said they expect there to just be one rate cut all of next year. Now, I think so much can change. I wouldn't read too much into that. The market is currently pricing in 2. So still not a lot, either for the whole of next year. 225 bips, that is. But something that that was, and I'm seeing this getting kind of blown out proportion. I don't know if you saw this whole piece around that Jay Powell said they are going to be beginning on the 12th, so on Friday, $40 billion worth of short-term treasury purchases that will go onto the Fed's balance sheet to shore up reserves that they will be doing each month for the foreseeable future. A lot of this is to focus on banking reserves, and they made it very clear this is not QE. And everyone's been saying, hey, QE is back, the money print is back. And I think, it isn't QE, because I think for it to be QE, you would be buying longer duration assets, and also probably in slightly larger size than this. But let's call it quasi QE. It is very stimulatory, right? It's a liquidity boost to the market. 40 billion sounds like a lot. It's not a huge amount. However, this could grow quite substantially. And this is kind of like what people will talk about as, the money printer, but maybe it's not necessarily out and out in your face QE. So this was something that when that line hit, I was watching the Jay Powell meeting yesterday and was like, oh, I'm going to go long here. And was like, let me just wait to see how this plays out. But that is going to get, I was watching the charts and it was just like giant green candle fired straight up to touch like 94.5K. And I was like, okay. And then we kind of like, everyone was like, wait a minute, let's just calm down and hear what the rest of this has got to say. So the other good news was we only had 3 dissenting voters. So dissenting votes happen when the voting committee member disagrees with the decision so strongly that they dissent from voting. And it's, a strong signal. The 3 people that dissented is, as usual, Stephen Myron, because he believed that we should have had a 50 bips cut and it wasn't big enough. Stephen Myron being the guy that Trump put in place temporarily, who is set to leave in January, by the way, and has dissented every single vote since he's been in because he believes the cuts aren't big enough. Then we had, alongside this, Schmid, sorry, and Goolsbee. They both were in favor of a no rate cut, so a pause. So you go, okay, well, let's just kind of discount Myron a little bit there. And there's 2 hawkish members. That doesn't sound positive for January. Here's what is interesting. So everyone's been obviously talking about Jay Powell is going to be, leaving in, stepping down as Fed chair. Won't be leaving the FOMC, but he'll be stepping down as Fed chair and being replaced in May. It seems like maybe Kevin Hassett is going to be the guy who will, whoever it is, will actually take Stephen Myron's place on the committee in January. When Myron leaves, this person comes in, and then they will go on in May to be the Fed chair. But what also happens is every year, in January, those 4 regional bank presidents, they rotate out to a different 4 regional bank presidents. And those 4 people that are rotating out in January, so that means this was their last vote. You have Susan Collins, who was actually a little bit more dovish, actually, in general in her voting. Believe she supported this vote. Alberto Musalem and from St. Louis, that's, I think I would say, on the more hawkish side. And then the two dissenting voters, Schmid and Austin Goolsby, they're both leaving. That was it. So them dissenting in this, I think like they're going to be gone and is no longer really something that's a problem. That's kind of a positive for rate cuts. The downside is we've got 4 people coming in, all of which we know, but we've got Neil Kashkari, who has been quite vocally hawkish. We've got Laurie Logan, who's pretty vocally hawkish, being they care way more about inflation, right? Beth Hammack, who you'd probably put in the bucket of like maybe moderate, slightly hawkish, cares about job stuff, like they all do, but like is still worried about inflation. And Anna Paulson, who is the newly elected Fed Philly president. We don't know as much about her, but you know, TBD, maybe a bit more jobs focused, but there's going to be more of a tilt towards hawkishness. If Hassett comes in as Fed chair, he's like mega dovish, right? Like he's going to be like cut every single time, but he has to convince everyone else. So it's kind of a bit of a mixed bag. And this for me is why CPI data on December 18th, critical, absolutely critical. If we get at expectation or it comes in hot, no chance in hell of a January rate cut. If it comes in under and we get a downside surprise and non-farm payrolls a couple of days before come in looking bad, then I think we have a really nice rally through into the end of December. There's a load more data to come that could change the course, but I think that has to happen for us to get any kind of meaningful rally. So that's my kind of summary on this, but there's going to be a huge amount of change. But what isn't going to change in my mind in the short term is how correlated BTC and ETH and all of crypto, ETH actually was looking a little bit stronger than BTC coming into this, to be honest, is to rate cut probability. And macro is going to continue to rule the roost for at least the next 2 to 3 months.
Yeah. I mean, we are continuing to hang out kind of in these 90K doldrums that we've been in for the last few weeks here, which is never really fun to see. So it'll be interesting to see, you know, with all of this already kind of being priced in, where we actually end up in the new year. Something just kind of as a side thought here, you know, as we were talking through all of these, you know, like Jerome Powell's heading out as Fed chair, and then, you know, all of these different voting members and everything like that. I was thinking, you know, what is the motivation for somebody like Jerome Powell or really any of these people to be involved in the Fed? This is such a high pressure position to be in. And interestingly enough, Jerome Powell is worth about $55 million, but almost all of that was earned prior to his time as Fed chair, basically just in a finance career. And believe it or not,
believe me, I think he'll be making more than 55 million in net worth after the Fed chair. I think it's kind of like it's funny in the UK. I don't know who would ever. I can't get into the mindset of ever wanting to be the prime minister of the country. I mean, you become the most easily hateable person in the country, regardless of your policies, regardless of whether you're left, centrist, right. You become a target. And yeah, it's kind of funny because I think the last time I saw like the prime minister's salary is something like £150,000 sterling, which, you know, the everyday person is a lot of money, but for the most important person in the country, well, the most critical role in the whole of the country, to be getting paid less than some entry level tech workers is quite funny. But then they
Mhm.
go and make the all of their money off the back of that, right? And they'll go and
Exactly. So that's
make
kind
more
of where
money.
I was going with this, is that I think it's really going to be interesting to see, where Jay Powell goes in the long term after this. But
Yep.
for the past few years, his salary has been fixed at an executive Schedule One rate of $246,000. So I don't think that that
According
was the
to, I think,
motivation.
I don't know if you saw a load of this like viral stuff. It's absolutely clickbait crap, but where it was showing like what technically across different states in the US like puts you um into the level where like you cannot maintain cost of living. And I think in New
Mhm.
York it was showing us something like 250K. It's like
Yeah.
anything less than that and you can't survive. Which I also
Yeah.
like, which is utterly ridiculous to say like, you are completely poor at that level. But I do understand the sentiment that it requires a hell of a lot more than most people realize. So Jay
Yeah.
Powell, lucky he's not perched up there.
Yeah, well, for what it's worth, the state that I grew up in, the highest paid public employee was a basketball coach. So
that's that's incredible, actually.
yeah, I
It
don't know what
reminds
that
me.
says.
It reminds me of I think was it the at one point one of the highest earning Australians of the year was Tiger Woods' caddy. I seem to remember that being like a stat,
Oh man.
which was just like an incredible stat.
Yeah.
But yeah, but yeah, I think it's a tough, it's a really tough job. I think I would go as far to say that Jay Powell has probably had one of the toughest,
Yes.
certainly in recent history, as like a Fed chair. This year has just been brutal for him, and
Mhm.
I will say, despite all of this, it's been pretty incredible how he's carried himself. I think he'll be definitely be on the right side of history, despite, both you and I had said that the Fed, and I think consensus here really is coming in to our post-COVID inflation. Jay Powell and the rest of the FOMC were too late to begin the cutting
Mhm.
cycle,
Mhm.
to begin the hiking
The
cycle.
hiking cycle, yeah. Mhm.
Um, it seems like actually, when you look at inflation data, they they're getting a balance. That so far this year, I think they got the balance about right. Um,
Mhm. But that
Next
really
year, who
required
knows?
sticking to their guns at times where it wasn't convenient to do that. But I agree with you. I think that Jerome Powell is going to have a relatively positive legacy here.
Yeah.
Um, he did, he wasn't really given the best scenario, that's for sure,
Hmm.
and uh, and he did things that were difficult to do. So maybe
Yep.
a little late to the party, but better late than never. That said, man, there was something that I've been wanting to talk about for a little bit of time now, which is Tether. So
Ooh,
if you
that
haven't
tiny
been
that tiny
paying,
startup, that tiny little
I mean,
company.
come
Yeah.
on, like we've talked about this before, but like the revenue per employee at that company is insane, which
I think
we'll
it's
get
top
into
top
here.
five of like all time or something like this.
It's always
Ridiculous.
always hanging out, yeah, in that realm. But if you're not familiar with what Tether has been doing financially lately, it's really interesting because they're starting to earn Wall Street level profits. So I just wanted to take a moment here to kind of check in on what's going on over at Tether. We only have Q1 through Q3 data for them this year, and they've already earned more than $10 billion in profit with
In
Q4.
profit as well.
Yeah, in profit, not in revenue, in profit. So it's amazing. $10 billion in profit with an entire quarter of data remaining. And at the same time, USDT supply, it just keeps climbing past $180 billion. I checked it this morning and there was like $186 billion of circulating supply as of this morning. And then
It's
at the
it's
same
pretty
time,
amazing.
it really is, yeah. And during all of the recent crypto sell-offs that have been happening, Tether stepped up and they bought roughly $1 billion worth of Bitcoin straight from reserves. So
This
they're
has been interesting. I'm interested to get your thoughts on this piece
Mhm.
because I can't remember who it was, but a ratings agency recently either shared a report or um oh man, I wish I can remember which company it was that was basically putting into question the stability of the backing and the reserves of Tether. Now they're all openly published, and this is almost like a meme in crypto, right?
Yeah.
But what was interesting was they had quite a significant allocation of gold and Bitcoin in there
Mhm.
alongside fully USD denominated instruments, which from their view hedges them against inflation and other
Mhm.
pieces. But and at the size they're at, I kind of understand it. But do you remember that last stablecoin issuer that went and started backing their stablecoin with Bitcoin? I remember them way back in 2022 or whenever it was, and yeah.
Yeah. We yeah. That was a wild one. I mean, the market was, you know, very different with the Terra Luna collapse,
Yeah.
with FTX,
And
with
Luna was a different scale. I'm almost tongue
yeah,
in cheek with some of this, but it when I saw the headline, I was like, "Oh, hmm, that's interesting." It does make up a much smaller part of the reserves, in fairness, and I'm not
yeah,
personally worried. But I do think it's of note for sure.
yeah. It is. It's interesting. I also think we'll get to it, but they got a lot of T bills, so
Oh,
that'll
they
be an interesting
are.
thing for us to talk through.
Yeah, I think they're one of the largest in the world, aren't they?
Yeah.
Buyers of
Hmm.
T-bills.
Yeah.
What a stat that is!
It's amazing. So, okay. So $10 billion in profit. Where does that put them on the Wall Street scale? Well, Goldman Sachs and Morgan Stanley, for comparison, are on track for 11 to 13 billion dollars in profit in 2025. That's like
Wow.
including Q4. So Tether just hit $10 billion in 3 quarters. That means that currently, just with its Q3 data, it's more profitable than BlackRock's entire iShares ETF business, which is incredible because there's a lot of money in
Oh
that.
yeah.
It's more profitable than most major US regional banks like PNC and Truist and Fifth Third. And it's more profitable than Robinhood, Coinbase, Revolut. I even looked up PayPal. You can throw it into this basket, and basically every other fintech combined. And then get this, they have about 100 employees, no
It's
credit lines, no deposit base, and no traditional banking footprint.
It's
So
like, the meme where it's like a perfect company doesn't exist. It's like it's phenomenal. It
it
is
is.
truly phenomenal. And the struggle that Tether has been through over the years. I mean, how many podcasts have we done over the years, especially in the 2019-ish era, where we were like, when is Tether going to blow up? Is
Mhm.
this thing actually just a giant Ponzi? Like, what's going on? And, for the longest time, the general consensus in crypto was Tether's the thing that is the black swan that's going to blow crypto up. And
Yeah.
that was back in the days when they weren't publishing their reserves and it was a lot more opaque. But man, they powered through all of it and certainly showed everyone actually that, their whole thesis was right.
Yeah. And so that thesis, well, how is it working? Well, it turns out Tether, as I mentioned, holds massive amounts of US government debt through T bills. They have roughly $135 billion in US Treasury holdings. And if you recall from all of the discussion that we've had about this year, 3-month Treasury yields were in the 4 to 5% range earlier this year. And still, even with the rate cuts, they're around 3.6% as of today.
Hmm.
So every new USDT minted is basically another dollar that they can park into those yields. And with USDT supply pushing toward $200 billion, Tether is effectively generating billions in interest income simply by meeting global demand for digital dollars. Now, what do I mean by global demand for digital dollars? Well, USDT is a major way that people access dollars outside of the US. So you take places like Turkey, Argentina, Nigeria, Vietnam. People are using USDT there as their functional savings account. They're basically parking their money in USD because it's safer, but using USDT as the sort of stablecoin proxy in order to do that. At the same time, cross-border payments in USDT are absolutely exploding because it's easier to move money through a stablecoin than it is uh, through old banking rails. And then across global crypto markets, USDT is accounting for basically the biggest share of stablecoin trading volume. And in many markets, it kind of functions as the dominant quoted currency for liquidity. So what this means is that a lot of crypto exchanges are using USDT as a reference and as a backing for liquidity. And at the end of the day, it basically becomes a massive high yield money market fund that rides on crypto rails, but
Yeah.
without all of the compliance drag of being a US financial institution. So, uh,
Yeah.
speaking
Here's
of,
a pub quiz. Here's a pub quiz for you,
Mhm.
Austin. One that I always found very interesting. Which blockchain do you think processes the most volume of USDT of all like the major blockchains?
Oh man, I have no idea. Hit me.
Tron.
No
Um,
way.
our good man, Justin Sun, his Tron
No way.
blockchain, like 10 out of 10 times, if someone had a gun to my head and I didn't know the answer to that, I'd be like, Ethereum. Right? Like,
Mhm.
why would it not be? Uh Tron, massive. And like nearly all of the transactions are that are processed on Tron are USDT. It's a huge, huge, especially Asia centric, of course. Um, Stablecoin market. I mean, in Korea, it's absolutely enormous. USDT is like, you know, 1 to 1 with like using dollars. And um what I think is super interesting, you mentioned, most exchanges will have even deeper liquidity on their
Mhm.
USDT markets than they will their fiat markets.
Yeah.
It's huge. But you talked about like their revenue, right? And like how they're earning all of this interest. What I think is, and I've never really been able to quite get my head around this, and simultaneously, I think this is one of the biggest threats to Tether's model, is that in all this time, Tether have never shared their net interest margin. So that is, the amount of interest that they generate from the the holdings that they have, the underlying like USD instruments and all this other stuff. They keep 100% of it. So think about things like
Mhm.
USDC. Everyone is probably aware of like, there's a long-standing connection and partnership with Coinbase. Coinbase
Mhm.
earns a percentage of all of the interest that is created from Circle and USDC as part of their agreement. Um, some of which is passed on to customers. That's what you see. Nearly every other stable coin, the issuer shares out either all or the majority of the share of it to those that are minting and like redeeming
Hmm.
the stable coin. Tether has never done it. Like this is the craziest thing in all of this, because if you think about, any exchange that is thinking about building like a supporting and listing a stable coin. Like if someone comes to us at Kraken and they're like, "Hey, we've got this new stable coin. We really want you guys to list it." Like the first thing we'd be thinking about is like, okay, well, it's very hard to bootstrap liquidity on a new stable coin. What's in it for us? Like it needs to make commercial sense. We need to get a substantial amount of the NIM for us to actually want to go and really heavily promote this thing and embed it into all of our markets, et cetera, et cetera. So, but Tether are just they really took the first mover advantage, and
Hmm.
they made themselves. They are truly systemically important to crypto, and that it's like this amazing flywheel. The thing though that I think is going to kind of be interesting is this year has been all about stable coins.
Hmm.
Everyone's issuing stablecoins. All of the major banks, conglomerates of banks, retail outlets, Walmart launching their own stablecoins, right? Competition is going to reach new levels. Legislation in the US is really kind of got
Yep.
much more clarity. I would hope at some point that Europe and other areas will develop more clarity. That will happen, I think. So you got to think like, when do we start to see compression come in on this side, and when will Tether start to potentially get to a point where they're at a competitive disadvantage and their market share starts to get eaten?
Hmm.
Simultaneously, we're hitting peak rates.
Hmm.
Rates, well, hopefully, are only going to go down from here. When rates go down, Tether's revenue goes down,
Hmm.
all things remaining equal. So I kind of look at this, I'm like, they're going to get squeezed. But they've done really well even in low rate environments, to be honest, before. So I would not bet against them, but I do think it's one of the bigger risks
Yeah.
that they have.
Well, when you talked about that report that was effectively shorting Tether, I thought you were going to say that not necessarily that it was related to their reserve mix, but that it was just following Fed rate decisions and
Yeah.
the huge impact that that will have on Tether's business model going forward. Nevertheless, you mentioned this progressing environment of stablecoin regulation in the US. And as we've covered in the past, it's getting a lot clearer and a lot
Hmm.
better, but it's not over.
No.
And so, because of that, Tether isn't fully regulated under US law. Even so, they operate offshore. And so, what this means is that global users are effectively getting digital dollar access through an offshore issuer. Regulators haven't yet imposed the kind of oversight that a traditional bank would face. Maybe they never will. And the dollar's fastest expanding on ramp is happening largely outside of US regulation because a lot of this is going through
And
Tether.
Europe, by the way, they're not MiCA
Hmm.
compliant either. And that's
Yeah.
why Tether also launched USDT Zero, and they also have launched like a few other. What a lot of people don't realize about Tether is they've launched a few other stable coins that most people don't quite realize over the years. They tried to do a lot in Europe to hedge against having like a regulated an unregulated like version of USDT, which is delisted from most exchanges actually in Europe. And they'd launched a few others that were supposed to be a more compliant version, and it was just didn't have the same kind of traction. So it's challenging.
Yeah. So I think Tether is I mean, first off, it's an incredible success story right now. But it is also amazing to see how one, they're driving real dollar demand,
Hmm.
especially globally. They're earning real yield off of their T bills. And because of this, they're competing with big old school legacy Wall Street institutions in terms of profitability. And they're doing all of this kind of outside of a rigid regulatory framework because that framework hasn't really landed yet. So, Tether, man.
$500 billion valuation, private markets.
Mm-hmm.
I don't know
Unreal.
if you know, them doing that kind of raise, or I don't know if they closed that round, or whether it's still ongoing. But you got to think, you got to wonder, like, what's the future path forward there? Like, maybe IPO at some point, but I don't know. Like, would they do that? Would they want
Yeah, what
that?
do you even do
I
with that?
can't imagine like Paolo and team wanting that.
Yeah.
That regulatory oversight. They already moved away from, was it Costa Rica or somewhere like that, or El Salvador? Maybe El Salvador might make more sense. It was somewhere in Latin America that they relocated everyone to, all 100 of them. But yeah, I think, you know, they're a bedrock of DeFi. The other thing, if I was to take like the bull case on them, you know, my bear case was, well, rates are getting compressed, competition is rapidly expanding, their margins are hurting, and their competitiveness is getting squeezed. The other side of that is it's the same for all the other competitors, but they're just also starting with a much smaller base. They are going to have to subsidize both the growth of their business through eating into their margins, offering out more of that net interest margin to distribution partners like exchanges, DeFi protocols, etc., whilst also being squeezed on the rates themselves.
Yeah.
I think also there's just like the this push to build the dominant stable coin in a sea of many stable coins. But Tether has just got such an enormous amount of market share. You just and also kind of global recognition, especially in Asia, that I just can't see them being toppled. I don't know how that moat gets broken, especially when you think about all of their cash. And you know, that's helped them build up a little bit of flexibility to take on risk, which is like having gold, Bitcoin on the balance sheet of the reserves. That is still risk, like no matter which way you shape it, because it isn't one-to-one. I mean, technically treasuries are not one-to-one, but still they're lower risk in that sense. So yeah, we'll see.
Well, what a week.
What a week.
Let's
Next week's
look
gonna
out
be
for December 16th and December 18th. I think that the NF payrolls, the CPI data, that'll be interesting.
Yeah, it'll give us some volatility for sure. Hopefully we get a good print come into the new year, and hopefully get a little bit of momentum. I think there's I still think a lot of people are exhausted from the 10-10 crash as well. But all right, we'll wrap things up. We'll leave it there, and we'll be back next week with another roundup. All right, man.